Down. All right. Welcome to the Blockument. Crypto education through everyday conversation.
Nailed it.
I am Nate Talbot, the Executive Director of Detroit Blockchain Center. And to my right is the ever-curious...
Ashlee Rose.
Ashlee Rose.
I am an everyday mother, I'm an online reseller, and I'm on a journey to figure out what in the heck, or WTF, is all of this crypto stuff about.
All of this stuff about. Yeah, I think we're all on the same journey, and anyone who isn't still curious, well, they probably just don't even understand what they don't understand.
Yeah, yep.
It is a long, tenuous journey.
They'll learn about it once it becomes the dominant. I
don't know. They probably won't. Dollars are dominant. People don't understand the dollar.
That's very true. I stand corrected.
Cell phone usage are dominant. People don't understand how cell phones work.
Yeah,
Internet's pretty dominant. People have no idea what the internet is.
I just learned about what the internet is on one of our shows.
Yeah, see, so
couldn't believe it.
Yeah, it's the way of the walk. People do not really know about or really care about
because we're lazy.
Yeah, well, we're something. Let's talk about what time it is so we can get into the show. What time is it? What block height are we at?
We are at block height 817,506.
Yes.
One just, let's do this one.
Yeah, 506. A new one just popped up.
Oh, I thought it just did that on mine. Sorry about that.
It might have.
Let's see here. The size is 1.64 MB, which is 3,600 transactions. And the total fees and subsidies are 8.68 Bitcoin, which equals $294,572 US dollars. And the winners of that beautiful sum of money is Foundry USA. Congratulations.
Foundry found it. Man. So that's a big, look at those fees. Total fees, 1.1 Bitcoin in fees.
Yeah, that's crazy.
That's 2 halvings away. That's going to be the whole subsidy in another 2 halvings.
Yeah.
Next halving will be down to 3.175, and then after that it'll be like 1.0 something math.
Yeah, math. Yeah, that's. So then basically the fees will carry.
Well, this is the long-term plan, right? The subsidy, we call it a subsidy. I think this was a bad way to describe that block reward, because really what it was, it's a subsidy at its core to incentivize miners, but really what it was a distribution method, right? For any blockchain that's launching, any cryptocurrency that's launching using like a blockchain type technology, the question is, how do you do a fair launch? How do I distribute these coins out to the world? When you're making new money, the question is, how do I get it to the people in a method that's most equitable, right? And Bitcoin chose to do it through block reward subsidies at half every 4 years. And with the idea that once the subsidy runs out, the fees
are going to run the network.
And one of the concerns, probably almost as far back as Bitcoin goes, is will our fees ever generate enough? This is like what the whole block size wars was about. This is what almost every clone of Bitcoin is about. It's all about scalability and sustainability. Right.
Well, that's what I was going to ask is why are the fees, do you know why the fees are higher like these couple times around, several?
Yeah, it's been like this for like a week now. Look at this. A couple days ago, the fee was what the next halving subsidy was, like 3 Bitcoin in fees. Fees alone. The total subsidy in fees was like 9 Bitcoin.
I mean, that's awesome.
Yeah, our good friends ordinals are back. That's what's doing it. Ordinals are back. Look at that, 2 Bitcoin fees.
Now, when you say ordinals are back, like in what way? Like just people...
Yeah, look at these blocks. Look at these big old blocks, right? The bigger the block, so when you're at the mempool.space, right? And when you click on any block, you can always go down and look at like the transactions, but they give you these nice visuals, right? Every single one of these little dots is a transaction. The bigger the dot, the bigger
the fee?
Well, the overall transaction was. The size. See how you have like, I'm pointing at my screen like you guys can see my finger. Whoops. There I go. I'm losing everything. Anyway, you'll see like this huge block right here, right? Let's see its fee rate, 151 sats per byte versus, let's see, like $5, right? The data is just smaller. And when you're doing like a inscription, which is what happens on the ordinals, right? They're not ordinals people are creating, they're inscriptions using ordinals. So we can have our terminology right. They take up more space. I keep clicking.
That little tiny block that you were just on had like a huge fee, but then the bigger block had less than
Well, it's about the data, not so much the fee, right?
Oh, okay.
If I could send you 30 cents, which is small data, and then because that 30-cent transaction is super important to me, I could pay you a $200,000 fee because I need it to be in the next block.
Right.
Versus you could be doing this huge JPEG, but you don't really care about because you're just doing it to do it.
Yeah.
So it's a huge block, but you're only going to pay, $1 for it. So it's going to sit in the mempool for.
Okay. So the bigger that the block is showing on the screen, there, like the one you're clicking, that represents its
the
like
data.
MB or whatever.
Yeah.
Whatever.
Yep.
The byte size, I guess you'd call it.
And so, yeah, oh, look at it. Getting more and more. 1.3. So, yeah, a lot of inscriptions are back. People are minting some magic internet wizard or something.
But it looks like it's the same, like similar, like 1.81 MB. Like that's still fairly the same.
The size? Well, yeah. It's a mixture of. First of all, remember, technically speaking, a Bitcoin block is only 1 megabyte.
Okay.
Right? It's 1 meg.
Okay.
But we found ways to cheat that meg.
Is that what MB means? Megabyte?
Megabyte,
okay.
Yeah. So think of your average MP3, your song you listen to. I mean, nobody downloads songs anymore. So, but back in my day, we used to download songs, and one song might be like 3 megabytes.
Okay.
So, one Bitcoin block is the size of 1/3 of a song. You get the opening hook and the verse, first verse. That's how big it is. But we found ways to cheat it and sort of. We've talked about this before. Stuff some more information in there, like through SegWit and now through Taproot. And
that's what gives it the over the 1.
That's what allows up to theoretically 4 megabytes now. You can shove 4 megabytes into one. It's a whole bunch of computer science wizardry and stuff. But yeah, so it comes back to you have full blocks, which are great for miners because this is answering if you actually have a usage of the block space, right? If we actually want to use that block space, there's demand, and now you go to supply and demand, which means the miners can still make money. If there was no block subsidy, this miner still would have won
49,000 USD.
Well, 1.3 Bitcoin because,
Yeah.
Who measures stuff in USD? It is not a basic unit of account.
You are
Satoshis are.
You are correct.
Yeah. So as long as the fees outweigh the subsidy or can supplement them, then the network will be fine. But the problem is if you're doing something like a Lightning network, right? If I wanted to open up a Lightning network channel, a brand new channel, I don't already have money in Lightning, it's going to cost me a lot of money. The median fee for this block that just went through is $6.29. That's the average. Half the people in the block paid $6.29 or more to get in that block.
Just to make a transaction.
Just to make a basic transaction.
That's
and so if you want to throw a $10
Yeah.
Lightning channel, right? I'm going to send $10 into my Phoenix wallet.
Right.
It's going to cost me $6. It's going to cost me almost $20 to load $10 in my wallet. That's a problem, isn't it?
That doesn't seem sustainable, right?
Right. So, there's still plenty of things that I'm sort of against we're still early, but we're still early. And on that tip,
yeah.
What are we talking about today?
WTF is an ETF, because for real, I keep hearing people talk about that, and I'm like, I'm out of this conversation.
Yes. In this black height territory, so really Friday from when we're recording this show, which is a Sunday. But around the black height, that's why we use black heights, right? So you can get a better grip on timing when we record. The big news is about the ETFs, and this all started some years ago, but the real juicy, the current trend of talking about ETFs started because BlackRock, which is like this multinational, they just own everything.
Yeah, let's just,
like everything.
Yeah.
They filed for an ETF, and ETFs have been getting denied over the past forever in the U.S. But BlackRock,
just in general, all ETFs,
all Bitcoin ETFs.
Okay.
And if there's not a Bitcoin ETF, you're probably never going to see an Ethereum ETF, and if there's no Ethereum ETF, you're definitely not going to see an Avalanche ETF or any other shitcoin ETF.
Can you just tell me what an ETF is?
So
first,
we'll go back to the ETFs.
I'm like, you're losing me.
Right. So why do we even want to see any of these ETF things, right? So what is an ETF, which is an exchange traded fund? ETF, exchange traded fund.
So now we're talking stock market.
Now we're talking asset markets, but yes, the stock market is one of the most popular ETF use cases. So when most people in the realm of stocks, most people don't buy or own stocks.
There's another type of exchange besides a stock, and this is my own ignorance, but no.
Is there another type of exchange?
Yeah,
there's a lot of exchanges.
Because you're saying that, but I'm like, okay, then what is it?
There's commodity exchanges, and commodities are like real
like
resources, corn, oranges, gold.
Yeah.
But there's stock exchanges.
Okay.
There are forex exchanges, which are currency exchanges.
Oh, I kind of thought those were all the same thing.
Nope.
I mean, I knew that they had different names.
Yep. Because they have different purposes. That's why they have different names. Oh. They all do different things. And
I get confused because, like Robinhood, for example, you can do, I think, all of those in one spot. And so I'm like, oh, okay, it's all the same thing.
Well, it's because Robinhood isn't really an exchange. It's more like an asset aggregator. Aggregator, just somebody who goes and collects a bunch of whatever for you, right?
Yeah.
So what Robinhood would do is, you want to place an order, you'll place it through Robinhood, they'll sit it on their order book, and then once they get enough, I think it's, I don't know for sure, 3-4 times a day, they'll go to the proper exchange that they have a relationship with and place your buy or sell order with them. And
so they're like one big stock agent. Is that what
they're called? They're the middleman's middleman.
Oh, okay.
If you want to buy Apple stock, you could go directly to Apple when they issue new stock and be like, I want this.
You could go into an Apple store and be like, I want some stock.
Well, I don't know about the Apple store.
Oh, okay. I'm like, that's
not yet. But no, you could go to Apple when companies, you'll do like stock splits, or you'll do, they'll issue new stock, or a new company will do an IPO and they'll do their initial offering. This is when the company sells the stock to the markets.
Okay.
This is the highly regulated part, right? The super highly regulated part. It costs millions and millions of dollars. That's why it's always such a big deal. But the government in the U.S., the government says most of us plebs aren't allowed. We are not financially sophisticated enough, because we're not rich as dick, in order to go in and buy stock directly from a company.
Yeah.
But we are sophisticated enough to buy stock directly from a middleman. Now, what the qualifying difference is, besides when we get to buy stock, we're just the liquidity for the rich motherfuckers.
Right. They
Right?
want to sell it, so they sell it to us.
Right. And then we're like, ooh, look it, I own it now.
Yeah.
So, but even with that, most people don't own the stock. Right? Nobody goes to Facebook and gets the stock. Most people don't go to Charles Schwab, for example, and buy Apple stock directly. Very few people do that. What most people do, well, most people get it through their 401k. But that's not buying stocks directly. What you're doing through a 401k, and then even if you're going to Charles Schwab, most people aren't buying, again, you're not buying Tesla. You're buying a certain kind of stock. You're like, you know what? I think CPU technology like Intel and AMD, right? I think that's the future. Or I think electronic vehicles are the future. Or I think saving the environment is the future. And so instead of buying individual company stocks, you have these other companies that put together these funds. So if you're interested in electric vehicles, all right, I'll put Tesla and this battery manufacturer and this other electronic vehicle manufacturer. I'll put all of them together into this little group, and we'll track sort of the pricing.
Could you put a commodity in there too?
Well, theoretically you could, yeah.
Okay.
You can put anything you want to into it, and then you're tracking the price, right? So I'll be that person who collects them all. So I'm collecting all of these different companies that I think are going to generally together trend upwards. And I'll track each of their individual prices, and I'll take that average, and I'll say, on average, this collection of stocks right now is worth $32. But we project over the next 10 years, this will double in rates. And now that's ridiculously high for a stock market because I'm a crypto guy. So.
Yeah, but it's also
so over the next
crypto.
10 years, this will go up 8%.
Okay,
Right?
yeah.
That's something more realistic. So for $32, you can buy a share of this ETF. And that way, you're not, you as a consumer, right? You can buy this, and instead of hedging your full $32, right, which is all your money on one company
to succeed. Okay.
Right? You're putting in a pool of companies. So if one of those companies does dramatically bad, but the market in general goes upwards, you're still good. You're hedging your bet. But now you don't own the actual stock.
Right.
Or you don't own the actual commodity.
Right. So,
Right?
So like you wouldn't have like the voting power or whatever decision making.
Correct. When the stockholders get together and have that vote, you're not called. Right. Nobody's mailing you a stock certificate, right? Because you don't own the stock, you own a derivative of the stock, right?
Okay, and just to like clarify here, all of the, let's say it's 5 businesses or 5 companies, in that one thing is called, that's the ETF.
That is an ETF. It's an exchange traded fund. They just basically track the price. When you look at like NASDAQ, right, they only do technology stocks, right? And then if you use some kind of trading platform, and if you're watching, if you throw up our screen for a second, well, give me a second. Let me log in. Don't throw up my screen yet. I might already be logged in. I am. So if you throw up my screen here, I'm using TradingView. If you're not watching, you're just listening, we're using TradingView. TradingView is a place where you can track assets, right? You can track things like stocks, crypto, commodities, gold, right? ETFs. So if I come in here and I type in like the Qs, QQQ, right? This is an ETF. This is basically taking your top NASDAQ funds and showing you how the price of all of those companies within those Qs, how the general NASDAQ trends. This is just tracking that price. So you could just buy, instead of buying Apple, which NASDAQ tracks, you can just do, you're tracking Apple, Netflix, Amazon, like all the FANG or FOING or whatever they call it now, because
Yeah.
companies change, you're tracking those index of prices. So as long as the technology sector is going up.
And you just picked Q randomly, or Q stands for?
Well, that's what this series is called.
Oh, okay. Just was wondering.
So when you type it in, you got the Qs, which is the Invesco Q Trust, which is a fund ETF. You could do the same thing with S&P.
So
You could track them, which are the non-tech. I forgot what S&P, Standard & Poor's, but I forgot what they track.
So then, did you say that they wanted to do a Bitcoin ETF? Is that what you said?
So, right.
Because that doesn't make sense in that case then.
It does make sense.
Well,
So what
Bitcoin
they want
is one thing.
Well, Bitcoin is one thing, but there's gold ETFs. It just tracks the one thing. But here's the thing. If I own gold,
Yeah.
I have to custody the gold, right? I have to be able to move the gold around. I have to be able to do a lot of stuff with the gold itself. And I don't want to be in gold, right? But I want to benefit from the price action of gold. That's one thing.
Right.
So what I can do is do a gold ETF, which will track gold using, once you get into the ETFs, you'll figure out how they have to disclose to you where they're tracking, how they're tracking the price and whatnot. So up front. Then I can have exposure to the price action of gold without actually having to take any of the risk of holding the actual asset itself.
Okay, this is really weird to me. So, does the third party who's running the ETF actually buy gold, or they're just exchanging?
Depends. There's two types of ETFs.
How,
so you have one.
Where's the money made, basically? Where's the profit that you make?
Well, this is
come from.
You need to go back, check out our What is Money episode.
Yep.
Then I think we called it Moneyverse. Yeah. Then check out our Moneyverse Finance, I think we called it, episode. What is finance? Because you have to understand, what is money, right?
Right.
Money's just this made up thing humans made up to track value.
Right.
Money in itself is an ETF if you want to get tricky with the terminology, right?
Because its value goes up and down.
Well, its purchasing power goes up and down, but instead of trading cows for wood, right, we have money, which is a way for society to track general value of all assets, right? So now instead of pricing cows in wood, I'm pricing cows in dollars. I'm pricing woods in dollars, and then we can compare which is more valuable, cows or wood, using this common denominator, the dollar.
Yeah, the unit
so
of
a dollar
measurement.
is technically a derivative of a raw asset, right? Like meat or clothing or housing, right? But then off that dollar, you want to do lending or something. Well, it's hard to do lending with the actual asset itself, so you build another derivative off of that dollar, right?
That where credit is established?
Yeah, so credit is a derivative of a dollar. Even a checking account is a derivative of a base dollar, right?
Oh my gosh, yeah. So we're so many levels away from actual money or value.
To the point is sometimes it can break free. So dollars, right, in the U.S., the physical dollar used to be a derivative of gold. It was an actual representative of gold, right? And for every 1 ounce of gold was $32 or something.
Okay.
Right? But that was a derivative. People didn't stop claiming the underlying gold. It was more useful for them to just trade the derivative of gold.
Right, the dollar, yeah.
Which was the dollar. And then that got so popular.
Yeah.
Here's the very high level, non-conspiratorial version, non-truth version. But generally, why do we need the gold? If everyone's just trading the dollars, why do we need the gold? Well, to back it up. Yeah, but how do you know the gold was really there in the first place? You had to trust the government. So why not just trust the government and we'll just give you dollars? And that's what fiat turns into, right?
Because people abuse trust.
People abuse trust, right? So I'm not saying we don't need it. I'm just saying this is one of the justifications for breaking a dollar away from gold, this derivative away from that, which means now credit built off of the dollar, which was built off of gold, now the credit is only built off the dollar.
Right.
And maybe credit just becomes the thing, and we can break that away from dollars even.
Is that why the value decreases or increases because of how you can take away from different things?
Well, this is where inflation becomes an issue because you start ripping it away from this raw commodity, which is this limited resources, which it's like, what is value? Again, this turns into a big what is money situation that we won't dive too deep into. Go check out the what is money episode, right?
Yeah.
But so when you're talking about an ETF, when you're talking about an ETF, you're just talking about a derivative of something, maybe even a derivative of a derivative. So Apple stock really represents the Apple Corporation, which sells products,
right? But you don't
and
own
services.
it. It's just you're just
let's take
playing Monopoly.
At first, if you own the stock, you own a piece of that corporation, which is a real thing.
Right.
The corporation itself
Like you're part
is the
owner.
base asset commodity, right? Well, thing, right? So you can own the actual stock, or I could create a derivative that's tied to the stock, but it's not the stock, and then you can own that. You still get benefits off the price fluctuation,
But
right?
there's like no responsibility, or like what's the?
Yeah, you take one step away from having to vote, right? So like BlackRock, who we talked about, this is what they're sort of big for. They own tons of ETFs and stocks and all these companies. So you go by, they first got on my radars because there was some story about all the airline consolidation. Well, it's like you got these airlines who are consolidating. Well, they have to vote. They're corporations, right? They're public corporations, so they got to vote on whether or not to consolidate. So who's making those voting decisions? Now, you own a bunch of you own some airline stocks.
Yeah.
Well, but you don't. You really own the ETFs.
Right.
Whoever owns the stock gets the vote. Well, who owns all the stocks? BlackRock. Turns out BlackRock owns like 30 or more % of like all the airline stocks, which means they have overwhelming voting majority.
Which is a whole nother conversation.
Which
and
it
how
is.
is that even possible or legal? Not possible, legal, because I see how it's possible.
Well, a lot of people, legal, yeah, it's a whole nother conversation.
Yeah, I don't know
So-
what that'd be called, but I'm gonna write it down.
So they own that. So who's really
BlackRock.
voting to consolidate the airlines? You have one corporation that owns a huge chunk of all the stocks, who's voting on two stocks they own. Let's say American Airlines and United. I'm making these, they're real airlines, but I'm making up the ownership piece, right? But if I'm looking at these two, am I merging them? Am I voting to merge them because it's the best interest of one or both of the corporations? Or am I doing it because if I do so, I also own Spirit over here, and by merging these, I can leverage a Spirit and make that stock go up, which is unrelated. It's not how the vote's supposed to happen, right? So you're throwing off all these incentives and whatnot. But that's, again, sort of beyond the point. An ETF, when you buy an ETF, that's sort of what you're buying, this collection of stocks. It's a derivative of the original, or a collection of commodities, or a single commodity or thing.
So then how would that work with Bitcoin? It would just be people who want to get into Bitcoin but don't want to own it, don't want to learn how to like custody it, do the cold storage thing, don't want to learn how
Correct.
any of it works. They just want to benefit off of it.
The idea of a Bitcoin ETF, and there's two types of ETFs, right? You have in-kind ETFs, which means if I want to offer you, let's use gold as an example.
Okay.
If I want to offer you a gold ETF, and an in-kind ETF means if I want to produce, I don't know, 100 ounces of individual shares of my ETF, I have to actually go buy 100 shares and custody them. 100 ounces of gold and custody the gold.
kind of
I have
like
the
pegged
gold.
to it.
Yeah, so it's like a peg.
Okay.
Right? But then you have it's called cash consideration or something like that, which means I don't actually have to go buy the gold. I just have to take whatever the price of the gold is and put that cash in the security, and then your shares that you're buying has a cash equivalent.
So at least you're still like liquid.
Yeah, it's liquid without having to have the underlying
the actual commodity or
commodity
the actual,
itself, right? And so with a Bitcoin ETF, some people don't want to hold Bitcoin, especially if you start talking about quote unquote institutions. They don't want to hold Bitcoin itself because there's a lack of regulatory clarity. While it's very easy to track, it's hard to custody. And there's just a lot of challenges, right? Like we said earlier, we're so early.
Yeah, and people can get scammed easy and like just give it away.
Yeah, it's just a very risky asset if you don't really know what you're doing.
Yeah.
And so if you're talking about, if I'm a retirement fund, right? Why would I got all the firefighters' retirement pension, right? Why would I put that in Bitcoin? This is what happened in Canada. They wanted to buy Bitcoin and they put it all in through like FTX or BlockFi, one of these scam ass companies. Now, they would have been better off just buying the Bitcoin. This is an argument for buying Bitcoin and not using these middlemen.
Yeah.
Bitcoin won't scam you.
Right.
Right? The people who manipulate your interaction with Bitcoin will scam you, and that's what happened to them. But you had all these teachers who lost some of their retirement pension because they put it in this middleman corporation for Bitcoin.
Yeah.
Right?
I wonder if they even consulted anybody, but that's another.
Well, yeah, but, they consulted
and like
people.
who? Yeah.
That's the problem.
Or people from FTX.
The idea is to get people out of the equation, not push them back into it.
Yeah.
But that being said, institutions still want that regulatory sort of supervision of government. Like, if this person scams me, there'll be consequences and repercussions, hopefully, right?
Right.
And so you have a Bitcoin ETF for some retirement fund or some corporation that wants exposure to Bitcoin, but they're not as daring as like MicroStrategy, who actually just goes, buys and custodies their own Bitcoin, sort of. They don't want that exposure. They don't want that risk, so they'll go buy the ETF, which gives them exposure to it. Here's an example.
Yeah,
there
but
are
that
some
could be
mining
even more
ETFs.
risky.
Well, it
Because
depends on how you look at centralization and all that.
and how it's structured, I guess, too.
Right, but
Because again, now you're trusting somebody in the middle to not F it up.
what did we say earlier, right, in this conversation? It's people don't really care. They don't know how the internet works. They don't know how their cell phone works. They don't really care, right?
Yeah, as long as it performs.
They say it. As long as it performs, it's the same thing. Anybody who's into the crypto, most people who are in this ecosphere right now, even though most of them, if not all of them, came for the riches, right? There's a revolutionary piece, right, that makes them stick around. These are the people who are still here during a bear market.
Right.
They're either too dumb to sell, or they're here for the revolution. Right?
Yeah.
So price hasn't really become a factor.
Right.
That's not most people. Most people just want the price exposure.
Yeah.
They don't care about the revolution piece. They don't care about the technology piece.
Oh, yeah, and they're going to get exposed, I can tell you that much.
Well, yeah. Exposing the wrong part.
Yeah.
But, so that's what all the buzz is about. So you have BlackRock. This is what the new big buzz thing is about. BlackRock filed for an ETF. In their now this is like the world's largest hedge fund or whatever they are. They've been denied they've put in like a couple hundred ETF applications. They've been denied once, ever. And there's a lot of political pull there. They have a lot of political pull.
I would imagine so. They have a lot of, they own everything.
With the party that's in power, right?
Currently,
around this block height. So to deny them, that would be huge because they really want it.
Right.
They want it so bad, and they're so confident they're going to get it. Not only have they filed the Bitcoin ETF about a week ago, earlier, a couple hundred blocks ago, they also filed for a Ethereum ETF. They're so confident they're going to get the Bitcoin ETF, they also filed for an Ethereum ETF. And so when you saw that price spike earlier this week, then on top of that, ETFs, especially Bitcoin ETFs, right, or crypto ETFs, you got to go through like these 2 approval phases.
How long does it take?
For a standard ETF, I think it's like 75 days. But with a Bitcoin ETF or a crypto ETF, because there's 2 processes, it's really like almost a year. It's like 280 days or something.
Whoa.
That the SEC has to respond. And you have to actively, the way they're doing it, and I'm not an ETF expert, but the way they're doing it, typically the SEC, you apply, the SEC has, like I said, 70-something days to respond, and if they don't, it goes through. The way we have to do it, the crypto companies have to do it, the SEC has to, that first phase, the SEC has to actively approve it. They can't just not say anything. So they get these
Okay.
75 days, and then they can delay it. They can be like, we
Yeah.
need whatever
As long as they
information.
want, it sounds like.
Well, it's not as long as they want. So here's the thing. People were thinking this past Friday that the ETF would get, one of the ETF applications was getting to a point. The SEC has lost some court cases, so their justification for denying them, which they've been doing, they'll push it to the last minute and then they'll just deny it. But now they lost this court case, which is like, you don't really have grounds, for not allowing what's called a spot ETF, right? An ETF that tracks the current price.
Okay.
We have a futures market, tracks the future price of Bitcoin, but we don't have a current market. And everyone was like, you don't really have a justification for not allowing it.
Yeah.
And then that was like a court case, and then the Office of Governmental Affairs or whatever, who was like, their job is to oversee the rest of the government and make sure they're following the rules. They were like, yeah, you're sort of just making up rules right here. You don't really have like justification to do this. So they're losing. SEC's like losing these cases.
So they can appeal it.
So they can't appeal it because they're not their own agency. They're it's a bureaucracy.
So she has to.
So they can ignore it.
Okay.
They can just ignore it, and then, but it makes a really strong case for a company or individual to go and sue them and win in court because the government itself has already said what you're doing is unconstitutional. The government is saying the government is doing unconstitutional stuff. You're going to lose in court.
Yeah.
So people were hoping that this week, because one of them was coming up, right? You could have done it. It would have been better just to approve all of them. So they thought we were going to see a big batch approval this week.
And then
the SEC was like, nah, we're going to push it back still. So now you're looking all the way to January 10th.
How many times can they push it?
Yeah, and how long? Yeah.
It depends on the filing. Like I said, it's like 200 something days.
Oh.
Okay.
But the next deadline is January 10th.
Okay.
They can't push it back. Now, this is not the
that's like the
BlackRock.
last.
BlackRock's last day is like in April, right around the time of the halving. March or April is when they have to make a determination. But the next one they have to deny or approve is like January 10th. If they're going to deny it, well, that means they're probably going to deny all of them, and you're
Right.
probably going to see a price dump.
Right.
Because there's a lot of speculation that they're not going to deny it because of all those government cases.
Right.
But if they're going to approve it, well, it doesn't make sense, especially because BlackRock has all this pull
Right.
and is like the king of all of them.
Right.
Right. If you're going to approve this other one,
Right. Who is the other one?
I can't remember
Okay.
because there's so many
Okay.
going. But if you're going to approve this one, well, you might as well approve all of them at that point. So we figure the idea is on January 10th, the market's either going to dump or spike because all of the ETFs that are up for approval are going to, the Bitcoin ones at least, they're all going to get approved.
Yeah.
Right? Which means institutions are coming because now they're going to buy. Now the tricky thing is, like I said, there's two kinds of ETFs. Everybody was assuming the ETF would be an in-kind, which means if BlackRock or whoever starts an ETF, if I want to sell, if I want 500 Bitcoin in my ETF, I got to go buy 500 Bitcoin.
Is that good for us? Like Bitcoiners?
That's good for price.
Yeah.
Because there's a limited supply. If you buy 500, that means you got to buy it and hold it, and that's 500 Bitcoin off the market. That puts a lot of buy pressure on, which drives the price up.
Right, but isn't that kind of like the opposite of what it's supposed to be for? Like it's supposed to be used?
Well, you have a lot of, I'm not a big fan of the institutions that are coming. I'm not a big fan of ETFs. I'm not a big fan of any of this stuff that's going on.
Yeah.
However,
because it's just more of the same, right?
It's more of the same. I view all of this stuff as a tax on Bitcoin. But at the same token, it's permissionless, and that's why I'm really here for.
Yeah.
So I would never fight their ability to do it. We just have to make sure the system we're building doesn't fall under regulatory capture. Right? But that's why it's an attack. I like attacks on Bitcoin. If you do any kind of decentralized open source system, you should love attacks on your system because that's how you know it's resilient or not and how you know where to build your defenses.
Right.
Right. We need to build. Maybe we don't need to worry about a soft fork that allows us to build side chains. Maybe we need to worry about a soft fork and upgrade that makes regulatory capture harder. Right. If it's a threat, we need to fix the threat before it becomes a real threat.
Regulatory capture being.
Well, if you have everybody, if institutions are coming, there's only 21 million Bitcoin that can ever be potentially produced. We're already down to a max cap of probably around 18 or so million because of all the lost Bitcoin that'll never be recovered, right? So if the ETFs and institutions come along and buy up all the Bitcoin supply, while that doesn't give you any power in the network itself, it kills the circulation. And BlackRock is an entity, a centralized entity that the government can come along and control.
Right.
They can seize all the Bitcoin if they want to, right?
Who is they? BlackRock?
The government.
Oh, government.
Government can come in.
Government can seize all of BlackRock's Bitcoin?
Yeah, because BlackRock is a regulated government
and then what
approved
happens
entity.
In that?
Well, then that Bitcoin comes off the market and you've just killed the...
Because they will never sell it back?
They could choose not to, right? Which kills the liquidity of the market, which, again, temporarily ups the price until... This is the problem with hodl mentality, right? If everybody's holding and nobody's using, what's the point of ever holding it? Right? Maybe you get this gold-esque store of value thing, but how long does that last if nobody can really access it? And if nobody can really access it, right, is it really the distributed, permissionless, censorship-resistant thing we wanted it to be? If only a few elites can ever hold it?
Right.
So that's an attack vector, right?
Yeah.
You need to make sure that people who want to hold it can hold it, but some pleb who's just trying to take a little bit of money, this is why gold isn't very valuable to most people, right? Because they have no way of actually custodying it, grabbing it, and utilizing it themselves. It's cut off from them. So now it's a wealthy person's hedge, not the everyday person's hedge.
So are ETFs opening up the door for attack on Bitcoin? And then if, like, let's say BlackRock doesn't decide to hold Bitcoin itself and they do something else, maybe
which is what the SEC is implying right now,
that they want them to do the cash thing where they just hold the cash.
Yep, the cash equivalent.
Okay, so that would be better for us Bitcoiners, correct?
Depends, right? Better's a crappy word, you know. If you're forced to eat a pound of mud or a pound of poo, you know, the mud is better, but it doesn't make it good. Right. That it doesn't.
Jeez,
to my understanding, well, you got to understand how bad better is.
Yeah.
To my understanding of it all, it's not as good for the number go up narrative because they don't have to buy with a in-kind buying Bitcoin ETF. You have to hold the Bitcoin. That's that market. That's the supply and demand. But with the cash, you don't have that market supply. But the threat is now you get more paper Bitcoin. Just like we have paper gold. Gold market cap's like $13-14 trillion, but there's only like $9 trillion of physical gold in the world. There's $3 trillion or so of gold that doesn't exist floating around.
But I feel like the more I learn about Bitcoin, the more I'm like, number go up is really stupid. And that's like not the point at all. Like the point is to be thinking in sats, not in US dollars. Like that's the whole point.
True, but you also have to, it has to be unit of account. And until it becomes a good unit of account to replace the dollars.
Why you would think in sats. And then once you start thinking in sats, then you can make it a unit of account. Because if you don't think in sats, it will never be a unit of account because you can't think about it.
Yeah,
it's conceptualize it.
It's a what came first, the chicken or the egg thing, which is another sort of argument. I generally agree. However, price compared to whatever other comparative, purchasing power is a better way to frame it versus price.
Yeah.
Purchasing power is part of the built-in metric of Bitcoin. It's not just about the 21 million cap. It's not just about proof of work. It's not just about peer-to-peer money or decentralized networks.
Purchasing power I can get behind. Price, kind of like...
Well, price is a representation of purchasing. Right. It's all about the linguistics of it all, right?
Yeah.
So I generally agree, but that is part of the Bitcoin network is... As the network grows, the purchasing power goes up. This is why the subsidy, as we were talking about earlier, that's why the idea is the subsidy can go to zero because the fees will pick up.
Right.
And by the time the subsidy is so low, it doesn't matter anymore. The fees will take its place in purchasing power, which will still give the miners incentive to mine and secure the network.
I see what you're saying.
So what TF is an ETF?
Yeah.
What is an ETF?
It is it could be it's like, let's see here, how do I want to describe it? I was going to say it's like a bundle of stocks or commodities that you can purchase, but I think a better definition would be like it is a derivative that stands for something of value.
Yeah, it represents a price.
Yeah.
It's literally a price tracker.
Yeah,
Without the risk of holding the asset.
Right.
Or I won't say risk, the responsibility of holding the asset.
Yeah, like responsibility. Yeah.
Yep.
Yeah. You can benefit from the price action, but you don't have to do anything other than put money into it, like into something that somebody manages.
Yeah, whoever's managing the ETF will take all the other responsibility. You can just track the price.
So let's just add some more trust to this system.
Yeah, because that's what it's about. As Charlie, our what I want to call him, our managing entity at our Wednesday night meetup. He's the one who's gracious enough to allow us to go hang out every Wednesday night at his establishment. As he would say, trust don't verify.
Yeah. No. Why did he say that?
Because he likes to mess with us.
Oh, okay. At first I was like, yeah, because I thought I was doing something good.
Yeah,
and then I was like, I heard it, and I was like, no.
And that's what these are the situations we end up in with the ETFs if we don't critically think about them. It's not that they're bad, it's just that we have to critically think about it. We have to think, like you said, more, it's about more than price action.
Yeah.
If you make it all about price action, then we fall back into trust don't verify, which is bad.
Yeah.
Don't trust, verify. I don't trust an ETF. I'll verify it. I like in kind because then I can see everything that's happening on chain.
Yeah.
When it's a cash equivalent, well, now I don't know what little trickery they're playing.
Yeah, it's kind of hard though because like we are, I don't know if I want to say wired, but like it seems like it. We're wired to just take the easiest route.
Well, it's called being a human.
And the easiest route is to just trust and not verify.
It's much easier to throw your dinner in the microwave than to go buy the original stuff and cook it. Or better yet, grow the original stuff yourself.
Yeah. Oh, yeah, absolutely.
Much easier to trust Nabisco.
That's right.
All right. So where can they check us out? How can they check us out?
We are on Facebook at the Blockument, Twitter or X, whatever you prefer to call it, at the Blockument, TikTok, and theblockument.com.
All right. So check us out, and every Sunday, check us here.
Whoa.
And right. That's and until then, come for the riches.
Stay for the revolution.
Or the ETFs, whichever one gets you going more.
Revolution.
Peace.
Peace.